So today I'm going to be going over the importance of risk management. Now, what I mean by risk management, all I mean is, what your risk reward ratio is, and as well as how well do you manage your risk when trading. Now, we're only going to relate this to trading for now because that's going to be the topic at hand today. So typical risk management or risk reward ratios are going to be, your 1-to-1s, your 1-to-2, 1-to-3, 1-to-4, 1-to-5, 1-to-6, 1-to-7, 1-to-8. All that means is 1%, you're risking 1% in order to gain 2%, or you're risking 1% to gain 3%, so on and so forth. This is all going to depend on your trading strategy as well as how risk adverse you are, or how you like to manage your own risk. Now, there is going to be, a correlation between a lot of traders that just aren't in trades long enough or can't trade profitably, in the sense of they lose, 1 or 2 trades, and then there goes their 5% for the day. Maybe they're risking 2% per trade rather than 1%. A good rule of thumb is you always want to skew the odds in your favor, and you always want to make sure that you're giving yourself as much opportunity to make money and mitigate risk. What does that mean? All that means is that, let's say if I'm risking 1% to gain 1%, then that doesn't really give me much leg room, or even any leg room for the matter of fact, because if I'm risking 1% to gain 1%, then I'm kind of breaking even if you really think about it, right? Because if I won that one trade and then lose another 2 trades, then I'm down 2%, and that one win didn't really do much. All it did was give me 1% gain, but those aren't really odds that you want to play. The odds that are more favorable are your 1-to-2 to 1-to-4s, right? Now, let's say you trade for a 1-to-4, you risk 1% of your account in order to gain 4% of the account. All that means is that now you just gave yourself way more leg room and way more space for error. And you are human, and if you just started trading, or even if you're a seasoned trader already, it's important, and you probably already know that the more leg room you have and the more room for error you have, the better, because you're not perfect all the time. And that's perfectly okay. That's part of being human. That's part of being a trader too, right? So if you win that 1-to-4, then that's beautiful. If that whole 4% got hit, then that's great, right? Because now off that one trade, you basically just gave yourself the opportunity to take another 4 trades for free. And all that means is you have 4% to play with that you didn't have to begin with because of that one trade you won. So one trade could really set you aside. Now, if you were just doing 1-to-1s, then that didn't really do anything for you. You didn't create that much of a cushion at all, honestly. Now, a lot of swing traders, do go for 1-to-6 and 1-to-8s, and that's perfectly fine. I'm an intraday trader, so I'm not really a swing trader. Swing traders tend to swing their positions throughout the whole entire week. I tend to just hold positions over one session or over 2 sessions, and that'll be it. Now, swing traders are more patient, and that's going to be your job as a swing trader. If that's something you do want to do, you are going to be looking for higher percentage gains, just because you are in the market a little longer and you are more exposed than normal people that are just scalping. Not normal people, but people that just intraday trade or scalp. Now, if you're a scalper, I urge you to stay away from the 1-to-1s and stick to 1-to-2 and 1-to-3s. I understand that you're trying to be in and out of the market as quick as possible, but you want to play the odds. And the odds are that if you're doing a 1-to-2, 1-to-3, that gives you more leg room, and you have more possibility to lose a trade and then, still be break even or in profit. And that's the whole entire point. Because let's say if you have a 10% goal per month and you're only going for 1-to-2s or 1-to-1s, then if you're going for 1-to-1s, that means you got to take 10 winning trades. That means you can't lose a trade at all in order to get to that 10% profit. Now, if you change that perspective and go for 1-to-4, then that's great. You only have to win 2 1-to-4 trades, and now you're up 8%, right? Then you could just not win the whole entire 1-to-4 trade, or even cut that 4% goal in half by 2, and you're already at 10% in just 3 trades. And not even 3 full trades that were executed completely, right? You have 2 trades that were hit for that 4%, and then 1 trade that you had to cut in half, and that's perfectly fine. It is your job to also know when the market is turning and when to cut your losses or take profit early. So with that said, now that changed the whole entire view of everything, right? So instead of being 10 trades in and exposing yourself 10 times to the market in order to get that 10%, now you're down to exposing yourself only 3 times. Of course, if you change that even more, and let's say you go for 1-to-5s instead of 1-to-4s, then now with 2 trades that you win and you fully execute and get that 5%, that's 10% right there in 2 trades. That could be 1 trade a week for 2 weeks, and then you're done. Or that could be 1 trade every 2 weeks, and then you're still done, right? That's just how math works and how the percentage gains are. That's why I like urging all new traders to stay away from creating the habit of sticking to 1-to-1s and 1-to-2s. 1-to-2s are okay, especially when you're just trying to capture percent here and there, but you're not really, fully confident in that move happening. Of course, you are going to make sure that your lot size and the math does add up. That's very, very important when it comes to proper risk management. Now, another thing I want to touch up on risk management is understanding that just because you have a lot more money doesn't mean that you should be risking a whole lot more. Now, for some people, that's perfectly fine if you do want to risk double the normal amount that you risk if the trading opportunity is there. But a lot of people get this wrong stigma in their mind that, hey, you know what? Sure, I made 10%, so now I have a 10% cushion. Let me risk 3 times my normal risk to reward ratio just so I could, capture more. And usually 9 out of 10 times, they do that without an optimal trading position or a possibility in the market, meaning they kind of just force the trade. So make sure you stay disciplined in that and be careful with giving the market back the gains that you work so hard to get. That happens a lot when it comes to trading. Even as you become a seasoned trader, you are going to notice that you tend to pay the market more than they should get paid. And that's because of, human error. And that's perfectly fine. It happens to everybody, happens to me to this day. And sometimes you just, sometimes the market gets, one up on you and you have to give back some of those profits, and that's okay. But you always want to make sure that it's within reason. All right. It was something that you maybe overlooked, but you don't want to be too wrong on. That's why, just like in anything you do, you want to have consistency. And all I mean by consistency in trading is make sure that all your positions tend to be the same exact size and the same exact risk parameters. Now, let's say if you win a 1-to-2 and you're like, hey, look, that's great. Now I have 2 more percent. Now I'm gonna risk a 2%, a 2 for 4. And that's perfectly fine. We didn't really change the math at all, right? Because the math for a 1-to-2% is the same thing as a 2% for 4%, essentially. So you want to make sure that you stay away from that and stick to, if you're going to commit to a 1-to-4, then stick to that 1-to-4 parameter as the account grows, and that's perfectly fine. That's the whole goal, right? The whole reason you're going to be leveraging more capital is because as you win more trades, as the account grows, as the funds grow even more, then now you have, your percentages are worth a lot more. Now, let's say you started with a 10K account and now you're at 15K. 1% of that is going to be 1% of 15K is way more than 1% of 10K. So naturally, you're going to be risking more, but not really, because it's all relative to the percentage that you are capable of risking or what your risk reward ratio dictates. Now, stick to all your rules, and that's all I have for you guys today. Hope you guys enjoy.